You are listening to chartingwealth.com for Monday, the 15th of August, 2016. Let's jump right into the charts. We're only taking 10 minutes. We're sticking with that promise. We ask you to spend 10 minutes with us every day figuring out what's going on in the market. We're going to jump into IYY. What is that? Well, that is the iShares Dow Jones U.S. Total Market Index Fund. It's an exchange-traded fund. It tracks the whole stock market. That's why we look at it first. The big picture. What do we see on our two-day chart? Well, we have 3 completed two-day candles. That's going to allow us actually to, and we're still in a confirmed up move, although we see the MACD and the signal line getting closer and closer, but we have redrawn our two-day trend line. We have a nice line continuing to move up. We do see the MACD and the signal line are getting closer. The derivative oscillator has continued to lose speed, but it's still in a confirmed up move. Now we're going to record in just a moment after this broadcast our weekly review and forecast, where we'll tell you what's going on the weekly chart, which is your double long chart. You need to know what is happening there, because why? Remember, all things being equal, the market always tends to move in the direction of the biggest chart. Our biggest chart that we can actually track accurately is the weekly chart, and we're going to go over that also. But the daily chart, the two-day chart, is in a confirmed up move still, although it is weakening, all right? But we still have 3 good, strong up candles. Now, if we look at the 4-hour chart, what do we see going on Friday? Well, we see a slackening off. We had a lot of up move on the first day of that two-day chart on the 11th. But on Friday the 12th, we saw basically things flatten and top out. We ended the afternoon with the doji, which means lots of indecision. We are still in a confirmed up move. We've not had a crossover yet going down on the 4-hour chart, but it looks like that could be close to happening, still well above the two-day trend line. So this market continues to push up no matter what. And it will do that until it doesn't do it any longer. We don't guess with our charts. We trend follow. That means that we let the charts tell us what's going on. We don't make guesses, okay? Now let's go back to our two-day chart, and we're going to look at SPY. That's the Standard & Poor's 500. And for the record, both the S&P 500 and the total market, IYY, were both down 0.09% for the day on Friday. But again, we have a two-day candle that shows us the up move, and basically it's the up move that happened on Thursday. Friday was the last day of that two-day up move, and we still have confirmed upward movement. We're going to also redraw our two-day trend line now that we can do so, and we can pretty much, we're close to connecting 3 candles, not quite, but we have confirmed up movement. We still have the derivative oscillator is still positive, although it is weakening, and the MACD and signal line are continuing to move up. It's more getting to be more like sideways motion, but they're still apart. They haven't crossed over going down yet. If we look at our 4-hour or half-day chart, we see basically 2 spinning tops, so lots of indecision on Friday. Still above the two-day trend line. Haven't crossed over going down yet, but derivative oscillators losing energy, and the MACD is getting close to the signal line to cross over going down. Has not happened yet. Okay, let's look at the Qs. It was up. The rest of the indexes, the 2 other indexes, were down, but the Qs, that is the NASDAQ 100, was up. Derivative oscillators still losing energy. MACD and signal line are staying apart, but are getting a little closer together, but they're further apart, of course, than we saw on either the total market or the S&P 500, and we still have a long-running, beautiful up trend line, and it continues to move up. Now, again, the NASDAQ 100 technology stocks, if we look at what happened on Friday, on our 4-hour chart, what do we see? Some down movement in the morning, up movement in the afternoon. Again, some indecision because these are spinning tops. Again, those are the type of candlesticks that tell us we've got some indecision. We have up movement and down movement, not a lot of range there. We're still in a confirmed down move on the Qs on the 4-hour chart. But again, those of you who jumped in back after the prior down movement, some of you may have tried to jump in on Friday afternoon. We are getting long in the tooth, but still above that 2-day trend line. For those of you who jumped in way back, you are, of course, feeling good somewhere around 112. And now we're up to 117.07. We've even been higher than that, up to about 1730. So continue to watch. Make sure you take profits when you feel as if you can do that. And again, some profits always better than no profit. Do not hold on to unearned, ungained profits. If the market pulls back on you, take what you can get. That is where we are right now as far as our three major indexes go. Now we're going to take a look at gold, which was down 0.21% for the day. We look at gold on our 2-day chart. It's been in a confirmed down move since the 8th of August. And if we look at gold on our 4-hour chart, our half-day chart, what do we see? We see that gold is still in its confirmed down move there. Also, gold has been flat since it bottomed out at 127.42 or so back on the 8th. Then it slid sideways, and lots of movement on Friday afternoon with gold. A lot more down than up, but very interesting in what was happening with gold. Again, punching below the lowest, well, right around where it had hit its lows around 127.18 on the 8th of August. So again, gold is still in a confirmed down move on both these charts. We don't like seeing it slide sideways like this because it means that our 4-hour chart does not work as well when we see that kind of sideways sliding. We like to see, because we use the MACD, the Moving Average Convergence Divergence Indicator, we like to see nice movement up and down. It makes it a much more accurate indicator. That is where we ended the market on Friday as we get ready to go into Monday, the 15th. Again, if you haven't listened to our How to Read a Stock Chart video, you need that. You also need the layout we use at freestockcharts.com. You also need our daily market worksheet. You can get all those by signing up for our newsletter. Please make sure to do that at chartingwealth.com. If you really want to help us out, please also go to iTunes, subscribe to our podcast, give us a 5-star rating. And lastly, our last ask is YouTube. We're getting closer every day to 1,000 hardcore subscribers. I know we have thousands listen every week, but with 1,000 subscribers, we will be able to provide you, once we hit that 1,000 number, with proprietary videos, and we can't wait to be able to do that. So help us out in any way you can. Let us hear from you too. Sign up for the newsletter, and always feel free to email us right from Charting Wealth. We love to hear what your questions, problems, and concerns are, and lots of great training on the webpage and at YouTube and our Facebook page and on our Twitter. We pump it all out constantly for you. We want you to be empowered by knowing how to read stock charts. They can be your roadmap to riches. If you can read a stock chart and can portend what's going to happen accurately in the future, just imagine what that's like. You don't have to worry about a hot tip, which almost never pay off, trying to find out what the talking heads and the pundits on TV are telling you. A lot of times after the fact, no, you want to know how to read a stock chart. That's what's important. Thank you so much. Let us hear from you. God bless from chartingwealth.com.